What's going on, guys? How you doing? Raji, Ricky, Ginger, Optimus, Andrew, Rav, Yash, Rikari. I hope you guys had made it out today alive, at least. A lot of lessons to be learned today. Obviously, if you're in our calls, wasn't too many. Like we were exiting most of the stuff green, but still, we there are ways to be better prepared for this kind of situation. Obviously, it happened out of nowhere, but we could have been better hedged, and that's one thing I want to go over today. Going over charts today is kind of useless because there's a lot of charts that are just absolutely broken. What's up, Bikram? How you doing? Most of the charts I see out there are pretty much either broken or very close to broken. So we will go over those charts tomorrow if you want on voice chat. We can go over some charts that are finding support or getting near support, or some high flyers that we can buy puts on. Because what Jay Powell said today was very changing. I know it was a big dump in the market today, but I do believe there's more to come. Why do I say that? Just because this whole inflation has been known to kill the market in the past. It's completely a market killer, and he just completely changed his policy from the last year and a half. He's been saying inflation is transitory. Now he's saying it's not transitory anymore. He's basically admitting it got out of control and he doesn't know how to control it anymore. So there's a lot of stuff to be bearish about here. And the first thing that should be bearish in your mind are the charts. So let's get right in here. SPY. Go to the weekly time frame. Let's scroll out a little bit. So if you're worried about today, whenever you're worried about a smaller time frame, always zone out, zoom out. Look at the larger term time frames. If you bought SPY in 2015 and you plan to hold it forever, right? You plan to hold it 10, 20 years. If you bought it in July of 2015, even if you bought at the highs of $190 and it went all the way down to 160, right? Obviously, losing $30 on an index is not fun. But you got dividends through that whole ride, and look where it is today. So that's long-term investing. I wouldn't worry too much. Obviously, always have cash on hand to add if you need to on dips, on moving averages, whatever. SPY has only visited the 50-day moving average once, and that was during COVID of last year. Okay, so I don't think we're going to get anywhere close to $312. It's a little extended. But look at this monthly right here. This is insane. Since COVID lows, we have been up in a line. We haven't even lost the 8-day moving average on the monthly. So just keep that in mind. This whole run has been parabolic on the monthly time frame. We haven't even lost the 8-day moving average. And every month is just up and up and up and up. So if we do pull back here, we could possibly see 432. Like, that's very normal pullback. That would still be a bull market overall. On the monthly time frame, 432, the 8-day moving average. And if we drop another 23 points in SPY, you guys know the corners that'll bring to charts. So just keep that in mind. SPY is parabolic. We are very, very extended on the larger time frames. I know you guys think monthly is a long time, even weekly. Like, look at the weekly chart. We barely even lost the 8-day moving average yet. So on big pullbacks since COVID even, we've went and touched the 21-day moving average. So with this policy change, if you're super bearish, the first number you should be eyeing to buy SPY in itself is 447, which is another 8 points down from here. So on the monthly time frame, even if we go to 432, monthly is still bullish. On the weekly time frame, even if we go to 447, we're still in a bull trend. So what's up, Nils? How you doing? Daily is just a mess right now. Pretty much broken chart. You guys seen what happened in September? When these kinds of sell programs hit, or like big changes in the market happen, there's a lot more than what you think. So when everyone thinks the world is ending, that's when you buy. Everyone doesn't think the world is ending today. The policy just changed. They just said inflation is not transitory. Expect higher inflation, which raises the prices of everything. It affects all businesses. It affects how they buy supplies, how much they pay for it. And it's a big policy change. It's not just technical here. This is news as well. So intraday, obviously we got that news from Jay Powell, just complete sell-off. But it was kind of known, like last Friday, we had this huge dump. Everyone got screwed on Friday. And then everyone bought puts at the bottom here, thinking Monday's a gap down, Monday's a gap down. Monday, they absolutely ripped it. And last night, they announced that the vaccine doesn't work against the new strain. So it's a very tricky market right now. If you're not experienced, if you're not day trading, I would recommend not swing trading here yet. People were asking me today what stocks are there to buy. I would not touch a long-term swing here at all, not even equity. So be patient. Let's wait for the setups. And as I showed you on the weekly and the monthly charts, there could be a lot more downside here. We need more clarity before we start jumping into longer term positions. QQQ, I sent this chart this morning on the 4 hour. Looks like a very clear head and shoulders here. Even though my lines are not very circular, you guys get the point. Here's a shoulder, here's a head, and here's a shoulder. So right now we are holding above this neckline. If we break this neckline here at around $390, I think the head and shoulder validates itself and we see a lot lower. If we hold the neckline, which we did today so far, we held the neckline on tech. So if we hold this neckline right here, I think we could negate the head and shoulders and move back, make a move back up. But again, lots of uncertainty in the market right now, especially with all the news, with Powell talking every day. Tomorrow he talks again, I believe. And if he says what he says today was a mistake, that he knows what it's under control, we're right back into a bull market probably. But if he says that he meant what he said, like he doesn't know when inflation's gonna do, I expect another dump just like today. So just keep that in mind. Don't go too heavy if you are playing. I am turning bearish. Other than that, I mean, wait for it. Wait for these stocks to set up. You don't need to catch the bottom on a stock. Wait till it hits support and reverses. XLF. Obviously off support, the plays that I do usually are just tight stops. So if something's support is at 20 bucks, you can buy it at 20 bucks and then your stop loss is like 10 cents away. But if you're planning on swinging or not keeping a tight stop, you have to wait till these charts set up. XLF is just a disaster right now. As we said, it was the weakest one other than IWM. We were in this range for a long time, broke it, dropped under the 50-day. Look at this dirty bounce. They bounced it almost all the way back to the high before the dip, sorry, and then they just dumped it right back down. So XLF is coming all the way down probably to the 200-day moving average, which is at 36.83. And if you follow XLF, it doesn't move that fast. So a $2 move on this one is a big deal. A lot of banks will go down a lot. So 36.23 on the 200-day. So that's the first areas of support I'm looking for here, especially with all the bad news and everything. IWM just a complete disaster. Big monthly, daily breakout, bull flag breakout, huge, and just came all the way back down. And look at this. We're expecting a retest here. It completely tricked us. Touched the line, went green. Next day, dump. We are under the 200-day moving average on the IWM right now. So when we're under the 200-day moving average, this is a very, very bearish trend. We have to switch to the weekly and look for supports here on the moving averages. Right now, we closed under the weekly 50-day moving average. When was the last time we closed under the 50-day moving average on IWM? COVID. So COVID was the last time we moved under the 50-day weekly on, so February 24th was the first week we closed under the 50-day. It took all the way until July for the IWM to close back above the 50-day moving average. Yeah, I will go over a couple charts at the end. I don't have any charts at the end here. I will, Oscar, don't worry. So the VIX here, again, we've been charting this every single day. What I've been telling you, it's been higher lows and higher highs every single day. Right now, we have a big resistance at 29. It's been rejected there almost 1, 2, 3, 4 times. 4 times we have touched 29 and rejected. So if we get through 29, the market's due for a lot lower. We're going to have a lot more volatility. But if we reject at 29, start coming back down, the market can start grinding up again. Watch the VIX, set an alert at 29. If we get through there, then we're in trouble. I also had this weekly wedge drawn out from a while ago. So during that whole melt up, we were just making a falling wedge on VIX. So you guys know this is one of my favorite bullish patterns. Once we broke out, let's see if we can go now. So $29, very key level on VIX now. We must stay under 29 for any kind of upside in this market. If we break 29 to the upside on VIX, the market should come down a lot more. So keep that in mind. ES, nothing really to say here. We already went over SPY. A couple things I did want to go over is in your long-term accounts where you have equity. Like I was telling you, SPY went up over the long term. Your equity usually goes up over the long term if you're in a good company. It's never fun to see your account down 10% a day or 5% a day or whatever. So a couple of things you can do in those long-term accounts, depending on your broker, they all allow different types of hedges in those accounts. I know like mine in TD Bank, they don't have a couple, and in Questrade, they don't have some that TD has. So In my TD Bank, I hold SOXs. This is SOXS. This is a triple leveraged ETF for the semiconductors. Why did I pick this one? First of all, it moves very fast, and this is the chart for semiconductors. This is the whole ETF for semiconductors, guys. Look how extended we are on this one. Not on the daily, let's look at the weekly. So if the market does want to completely turn around and come down, look how far away we are from everything. This whole run up, we are very close to the 21-day and the 8-day, right? Look how far away we are from here. 8-day moving average is at 292. We closed at we hit 312 today. So we were up 22 points from the 8-day moving average this so far this week. And the 21-day moving average is all the way down at 276. So every time we've pulled back on this one to the 21-day, one time we almost went to the 50-day. That was an September, October drop. And just looking at the charts, like look how far AMD is. I love the companies. I'm not going to lie, like Nvidia, AMD, they're all the future. But look at everything resets. I mean, during the dot-com crash, they crashed all the internet stocks. Isn't the internet the future? Isn't the internet everything now? It doesn't matter. They just reset everything. Bitcoin will do it too. Nvidia, look how far off it is. You know what I mean? LRCX was flying the last couple of weeks. Look how far off the moving averages it is. TSM was fine. I'm not going to open that one. That one's whatever. But you guys get my point. AMD, Nvidia, the big boy chips, they're all flying. They're way too extended. And if the market does pull back, those ones are going to get hit hard. Anything that's flying right now is going to get hit hard. SQQ is another one here. This one's actually a leverage ETF for the QQQ. So if you have a lot of tech, you have a tech heavy portfolio in your retirement account, whether it be 401k, Roth IRA, RRSP, TFSA, whatever the hell. If you want to buy equity and hedge against that equity, let's say you have $1,000 in Amazon and you take $1,000 hedge. When Amazon's down 5% in a day, that hedge will be up like 10% in a day. So your account will still be open. I mean, up. So that just like have a hedge, protect yourself. You don't want to see, because when your account is down big, trust me, I've been through this. When your account is down big, especially when you're first trading, panic kicks in. You start not thinking straight, panic kicks in, and you start selling. You just like panic, and you don't ever want to make decisions out of panic in the stock market. So that's why you should always be hedged. Just look through these, look through which ones you like. Obviously, the charts don't really matter here. It's just a hedge, but where QQQ is here, if they really want to rug pull and change this market and bring QQQ back down to the 21-day moving average here, it's all the way at 375.75. So QQQ can drop another 20 points here. And if it drops 20 points and you hold it in your portfolio, you're going to have a hard time holding that. I don't care who you are. VXX. This is another one. So VXX is just another way to play the VIX. It's actually a smarter way to play the VIX. The VIX contracts are very, very expensive. But VXX is just the same. It's the same concept. Okay? Whatever you want to hedge with, hedge with. VXX is more volatility hedge. SQQ is just tech hedge. And then SOXS is for semiconductors. I'll go into some like certain stocks. Tomorrow what I want to do is we're going to jump on voice chat and we'll look for very extended stocks that we can short. Because again, I am bearish. Obviously, if the market rips tomorrow, I'll change my mind quickly. But right now, especially with what he said today, plus the new variant, plus everything that's going on around the world, it's hard not to be very bearish into year end. I don't think we'll get no Santa rally. I don't think anything like that's happening. So let's learn to embrace the price action. If it's going down, we got to play it down. We're not going to sit around and do nothing. Net. Okay, so net, when it was back here when I shorted it, it was at 100x price to sales. So basically how many sales they do, the company was valued 100 times that. Tesla was only 23x sales. So that just gives you a little example of how overvalued net is right now. It's 4 times more overvalued than Tesla, just on that statistic alone. I'm not talking about revenues. I'm not talking about anything else. Just price to sales, net was at 100x. Tesla was at 23x. And people call Tesla the most overvalued company in the world, right? So net, very good short here, I believe. Technically, I don't really, let's see. It's just very far off the 21-day moving average. Obviously, reversal signal right here this week, right here. The week of November 15th was the reversal signal on net, obviously. Reversed down last week, but they bought the dip off the 8-day moving average this week. If we close below 186.83, so a close on Friday below 186, we should see 160 trade. All right, so basically all these charts are very, very, very extended. We need to watch out for reversal signals like this, which we probably got on Friday and today. So look for these extended stocks. Tomorrow we'll jump in the voice chat. We'll chart them all up, and I'll just show you my thoughts. Even the daily, like this is just a bear flag. So when this runs up like this, big run up like this, dump off, this is just a bear flag right here. I would just draw this as this. Once it breaks underneath this little bear flag here, the only support left is this 178 low, which is the beginning of the bear flag. Flip these charts around, it's the exact same thing. So look, you guys see how we do this huge bull run, consolidation, bull flag. Now we're going to be finding the exact same thing, but we're going to call them bear flags. That's the only difference, and puts pay faster. So big run up, bull flag, broke that line, and look, we go long. We go long, it goes crazy. Same thing, dump down, flag, consolidation, break that line, it should go crazy. Just like we did on QCOM, we sold that this morning. You see, just very clear, very big move up, bull flag, breakout, and continuation. Now we just do the exact same thing the other way. So you can go back in history and do the exact same thing. It's usually the same patterns over and over again. We've been in a bull market for a long time. It's going to be hard to find those, but let's go into now. Did I go into now? Now, same kind of thing here. Almost the exact same setup, right, Bookie? Same thing. So just so you guys see it. Does that not look like an upside down bull flag to you guys? Just straight dump down, consolidate for a bit, and then let's see if it breaks it and goes lower. Same thing, let's watch for it on Costco. Very extended. Again, you have to know what you short as well. If they do lockdowns and if this COVID is a bigger deal than everyone expects, you want to stay away from the stocks that were big runners during the pandemic, which was ZM, Docu, Home Depot, Costco. These kinds of stocks are tougher, but if you zoom out on Costco, like, this is ridiculous. I love Costco, a great company. Every time we get too far away from the 8-day moving average, we pull back into the 21-day moving average, as you guys see. So Costco puts, we nailed them last time on this pullback. We'll probably nail them again here. Costco, I see 514 as a minimum. 514 is a minimum, I see. The only part about being bearish that is hard, that for most traders, for longs, we can buy a bull flag breakout and we can hold it and we'll be comfortable. Puts, there's wicked bounces in a bear market. Wicked bounces. So it's very hard to hold through the bounces. But once the trend changes, it'll be much easier. Right now, it's just all, we're still in a bear bull market. This is still a bull trend. Everything is still bullish, but the news that came out, everything going on around the world, the headline risks today, Friday, it just kind of shows you got to switch quick. So when we switch, just get ready for all this. Costco, big turnaround coming. HD, look at HD, that's crazy. Bookie, you pointed this one out today as well. This one, I see a minimum of 381 traded. When, I don't know. But I see it coming very, very soon. 381 and probably 355 too if this market really wants to get ugly. Walmart never got back to its highs. This one could be a good short as well. But since it's not at its highs, it's very hard to short here. Let's see. Roblox was a big runner. Roblox is extended as hell. I see this one coming back to at least 107. That's 20 points down. If we pull back, it's just patterns, right, guys? Like, you guys go on the daily, you can go on the weekly, you can see the same kind of patterns. Every time it gets too far away from the 8-day moving average, it pulls back into the 8-day moving average. Whether it be earnings, whether it be news on the company, whether it be whatever, once it starts to get too far away from the moving averages, it tends to pull back. So give yourself time if you need to. Only take the best setups. AXP, again, these all had beautiful setups. They're all broken now. AXP was so beaten down. They announced earnings here, absolutely crushed their earnings, raised guidance, killed every number that they had, touched the top of the wedge, and now they're down 30 points with no news, with no business slowing down. Who stops using their American Express during COVID? I use mine I use it more during COVID. So American Express, again, look at this. We had a very clear broadening formation. We had a very clear support. That's why I cut my calls today as well. Tight risk to reward entry yesterday. Broke my support, got out, no damage done. If I take that trade 20 times, probably works 15, 16 times. So long run, I'm still winning. AXP broke it. MA broke it, I'm sure, even though I didn't look at the chart today. Yep, broke it to the downside. Visa's just absolutely destroyed. Visa's trading at levels from February. So this is all done. You see Twilio's getting crushed. Right? Huge wedge breakdown, bad earnings. We had a bounce going, and then today happened, Friday happened. Twilio actually held up not so bad. So Twilio, complete rejection of 21-day moving average. If this one turns lower, we could see a retest, at the very minimum, a retest of 266 on Twilio. We got Amazon looks like trash. Like, remember yesterday I sent those weekly and monthly charts? Why did I send them? 3550 was a very, very big level. I'll show you guys why. The monthly breakout happens over 3550. It tried it in July. If you see here, we went to 3773 in July. They closed the candle under 3550 for the month in July. Stayed under there for another 4 months, tried it again, and we closed again under 3550. So 3550 is deep. If you want to take leaps or like longer out expensive options, Amazon, I would say a monthly close over 3550 is needed. It doesn't even have to be monthly, even the weekly, you can see it, I think. All right, weekly, it did fake you out a couple of times in July. Faked you out in November once, but we closed right below it. So we're still range bound in Amazon. Netflix was the only real one that broke out of one of these bases. Netflix, Amazon came into this weekly range same time, and when it did finally break out, it did go. But even Netflix, like, I mean, during COVID, obviously it was strong, so this one's a tougher short. Other than that, just let's look for some extended names tomorrow. We'll set up some shorts during market hours. You guys got to be patient in this market. I'm telling you right now, and you're learning from the best guy that knows patience is Ricky ever. Like, I've never traded with someone that has as much patience as Ricky. So make sure you guys are listening to him. He doesn't say all this stuff just for fun, you know. He's been here, he's done that. And listen to him, be patient, wait for the best setups, and when the market flips, flip with it. Don't have a bias, don't go crazy. But I am bearish. And thank you guys for attending. I'll see you tomorrow.